Hello, Phil Antonson here of Lucrum Trading Systems. I'm here today to do a quick overview of the Lucrum Ruby system. I know there's been a lot of requests for this video, so I'm glad I've been able to find the time to make it. This video will cover a lot of the core components of the Ruby system and how it is designed to give you the upper hand in terms of pattern and trend identification, as well as actionable trade trigger signals that you can use whether you are a day trader, swing trader, or long-term trader. Alright, to begin we're going to take a look at a basic 15-minute chart of an E-mini, and without the aid of any type of indicators, it's very difficult to find out when there actually is trading opportunities. You know, with hindsight bias, you can tell that this chart is very uniform in terms of intraday trending, but you know, that's a lot of hindsight bias, and without that, it's tough to know when you should get into a trade and when to exit a trade. So to assist in that, we're going to apply the Ruby system to this chart simply by going to Indicators, scrolling down to LTS Ruby. For this example, I'm just going to use my basic 15-minute parameters and click Apply. So here you can instantly see the improved clarity and definition of the transition in price and the trends that have formed, as well as these actionable trade trigger signals that are scattered throughout the chart. One thing to note with the Ruby system is nothing repaints, so as the chart is forming, all of these bars are going to stay the same color as they would in live versus historical charting. And I think that's very important. I know there's a lot of systems out there that give you a lot of hindsight bias. You know, they'll take some historical charts and it looks fantastic, but when you actually run it in a live setting, those signals are no longer as actionable as they would have been in historicals. So with this one, you can have the confidence knowing that when these signals were triggered, that they would have been actionable and you could have traded for each of these. And you know, definitely for this example, it was, you know, some very good trading and some very, very profitable runs that could have been had. Alright, so now we're going to take a look at, we can continue this chart a little bit further so you can see, you know, how the system worked for this particular period of this market. You know, next we can go into some of the other components and features of the Ruby system that really tailor it towards being flexible in terms of what your trading style is. You know, you don't need to be a little bit longer term trader that holds for, you know, more than a few hours. You can definitely trade the Ruby system with very quick trades as a day trader. But to do that, we're going to use the aid of two really important parameters. We've got the trade trigger sensitivity and the trend sensitivity. The first one we're going to look at is the trend sensitivity, and this is a numeric value that will adjust how much of a retracement needs to be identified before any color changes in the bars. So for this example, we're going to go from 18. Here's the 18, and we're just going to crank it up to 50. So with the 50, you can see that there's a lot more of these transitionary gray bars. You know, the signals are now a little bit more delayed. It took a little bit more time for these trends to be more apparent, for the signals to have been enacted, and right now for a 50-minute chart, that's not really ideal. You know, doing a 50 is going to give you too delayed of signals that you wouldn't have too many really profitable trades. But where this is really handy is for people that like to trade with a little bit larger charts. You know, whether it's the 30 or 1 hour or even day charts. You know, having this more defined clarity in the trend itself, you know, gives a little bit more confidence for long-term holding. And on the flip side, let's go ahead and turn that all the way down to a 5. And now you can see that there are going to be a lot of these intermediate and intermediate gray bars and reversal bars in the actual trends itself. And with a lower number, this is more valuable for people that are doing shorter holdings or day trading, because it's going to be more sensitive, so you can take quicker trades and exit these trades quicker. So if you're running like a sub 5-minute chart, you might want to crank the settings down a little bit lower and adjust it accordingly to what feels right for you. Alright, we're going to go ahead and change those settings back to default and take a look at the trade trigger sensitivity. And the trade trigger sensitivity is another numeric value similar to the trend sensitivity, which adjusts how sensitive the system is at looking when there is a trading opportunity and when it will actually draw a signal on the chart. So let's go ahead and again crank it up to 50. And you can see that the signals are no longer at the median area of the reversal. They're a little bit more delayed in these particular examples. And again, similar to having a higher trend sensitivity, these are going to be more suited for people that are trading a little bit longer holdings. They want more defined trends and fewer trades. Again, on the flip side, we can go ahead and take the trade trigger sensitivity down, and we can put that one down to 5. And now you can see there's a lot more signals scattered throughout these intraday trends, which are fantastic for people that aren't necessarily in front of their computer at all hours of the day. So if they missed the first one and they don't feel comfortable entering another position based on their own examination, they can go ahead and enter these continued signals throughout the trend itself. The difference in the colors, as you can see, there's these darker green and red arrows. The darker green arrows and red arrows will signify that the price has moved in continuation of the first signal or even the second signal. It's going to be a value that calculates how far the price has moved against the initial signals. And when they're red, it means that the trend is already in progress. It already could possibly be exhausted. And when it's exhausted, your chance of catching the tail end of the run is going to be more prevalent. In this particular example, you can see that these 2 red arrows, had you enacted on them, there really wouldn't be any margin for profit, which is just fine. You definitely can't expect that every single signal with a parameter like this would be profitable. Alright, now that we've had a look at those 2 key parameters that you can play with to best suit your trading style, let's go ahead and look at some of the other features that the Ruby system has. So first, we're just going to go ahead and put these values back to what my defaults are and take a look at the range pivots. So we're going to go enable this to true, click apply, and here you can see that there are now range pivots that are calculated based on the deviations of the highs and lows throughout the chart. And these are very handy. They help you identify patterns in the chart itself. And let me go over some of the quick features and parameters associated with these pivot points. The first one is the threshold. The threshold is going to be the deciding factor in calculating the difference between 2 consecutive highs or 2 consecutive lows. If the price value is within this range, it will consider it to be double top or double bottom pattern formation. So 50 is unrealistic. That's way too big of a movement required for that threshold to be met. So let's go ahead and turn this down to 5. So the 5 is going to basically mean that the price difference between consecutive points, if it's less than 5, it will consider it to be a double top or double bottom pattern formation. And with that, you will start seeing some of these patterns to identify. And these patterns will be formed in real time as they are developing. And they are very handy in terms of catching patterns that you may have missed. It really helps you identify where there could be some breakout patterns and where there could be some support and resistance levels. So the you can see a couple here. We got a descending channel, and the descending channel is a bullish pattern. It's a channel that continually goes down, and the anticipation, this one was a little bit continued, and the breakout is actually right here when it ran out of this channel and it didn't really go back into that channel and ran back up. So, and the falling wedge as well is when there is a continual decline with a narrowing pattern range or narrowing price range. So for this, this can be adjusted on the sensitivity of these pivot points by adjusting the counter thresh parameter. I think 3 is probably a little bit too low for a 15-minute chart, so we're going to go ahead and try a 4 and see what the difference is between these values. Alright, so here you go. This is a slightly less sensitive pattern formation identification. You can see that these patterns are probably going to be a little bit more accurate. You've got a rising wedge, which is a bearish signal up here. Moving forward, we have a descending channel, which is a bullish signal, and continuing forth, I don't really see any more. But it's very handy. There's not. I wouldn't necessarily enact on these patterns wholeheartedly, but they are definitely going to give you a little bit of an advantage in terms of identifying where price could be going in the very near future. Alright, now we're going to go on to one of the other added benefits of the Ruby system, is the included Vision Renko bar type. Now the Vision Renko bar type, if you're familiar with other Renko bar types, is they're a non-time denominated bar type which will form bars based on the movement of price itself. So it really smooths out a lot of the chop in terms of what you might expect from a standard 15-minute chart such as this. In this example, we're going to go ahead and take this chart and apply a 4-tick Vision Renko on it and see the difference. You can definitely tell from a chart like this that it's very difficult to try and capture any sort of trade opportunities from this. There's a lot of sideways movement, a lot of intraday volatility, a lot of spiking, and just a lot of sort of sporadic behavior, which would be very difficult to actually get some good trades on. So let's go ahead and go to our data series, go down to Vision Renko, and okay, let's go ahead and do a 5 and load up 5 days and go ahead and apply that. Alright, now you can definitely see a difference in terms of the clarity of the price movements itself. One thing to note with any type of Renko bar in terms of any rapid volatility is these can sometimes develop very, very quickly. So some of the trades that you might see signaled on a Renko chart might not be actionable. In terms of this, however, a 5-tick Renko on a chart like I showed you, pretty much every single signal that would have been generated on this chart would have been actionable, bearing maybe a couple of ticks of slippage. So I think we can actually clean this up a little bit more and identify more trends and clarity in the movement of price itself by applying the Ruby system. So again, let's go ahead and take the Ruby system, again the same default parameters, and go ahead and apply it. And again, you can see that there is going to be a new level of clarity and cohesion with the movement in price, and it really helps identify where the price and the trend in price is moving and when there is trade opportunities. In this example, this one could have been possibly a profitable trade. However, it would have likely been a little bit of a wash. There really wasn't much more continued movement, bearing that it seemed to have bottomed out at this level. However, you've got this signal right here would have been extremely profitable. This one as well would have been extremely profitable, as well as this one. A lot of opportunities for profit here, and this one as well. There's a little bit of room for movement. It did retrace back a little bit past the point of where the signal was generated. However, there is going to be possibility and maybe a likelihood that there will be a continued downward trend as the chart continues. Alright, I think that about covers it for today. I think we were able to take a look at a lot of the core features and components of the Ruby system, and primarily how it gives you the added clarity and confidence in your trading, knowing that the system will do a lot of the back-end research for you in the behind the scenes with its deeply algorithmic components. And it's a system that I developed many years ago using key components that I found success in my trading, and I was able to wrap it up in this sort of all-in-one suite and I'm very happy with it, and I've had a lot of good feedback about the system, and it's worked very well for me in my professional career, and I believe it'll work very well for you and yours. Again, the system is sort of all-encompassing. It works in virtually every market, every time frame, and every style of trading. You know, whether you're a day trader, a scalper, swing trader, or a long-term trend trader, you'll find features and components of the Ruby system that will aid you in your trading. Again, the system is only $395, which is a lifetime license, which includes all updates, including the anticipated update for NinjaTrader 8. I think that you'll find a lot of benefit in using the Ruby system in your trading. Thank you very much for watching, and happy trading.